Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 8th of October here in 2020. And, well, the bull market continues. At least it sure feels that way for the time being. And we're going to talk about weekly expected moves, because all of our equity futures index products are ending right at, well, it's Thursday. We have Friday to go. A lot can happen on Friday, can't it? But they're ending the week right here into their expected moves. So Friday, that will be the determining factor for bullish above to keep pushing up into this new swing high territory. Or as a probability would say, we're going to pull back against it. So let's start with our ES futures. This is our TheoTrade weekly expected move indicator. And the main idea, keeping it very, very simple, if this is the first time you're seeing it, it is in the member shared studies page. This is the option statistics. When you start out the session, it gives you on the Friday contract the expected move. So what is your implied volatility? The implied volatility takes it into a formula. Long story short, prints these green, which is the upper weekly expected move, and lower weekly expected move, that's the red. This is true for individual stocks as well. But we like to think of it as swing traders on the bigger picture. And the simplest thing to think about is when the market is volatile, the weekly expected move will be wide. When it's not so volatile, that weekly expected move will be a little smaller. And that, of course, is relative to volatility, specifically implied volatility. How do we trade with this? If you're a swing trader, this is a good way to reference when a market is likely to turn or likely to reverse. For example, oversimplification is that when you're into the red or the lower weekly expected move, that was the case a couple of weeks ago in September, then we can expect the market to rotate or trade up away from the lower weekly expected move. You can trade reversal, in-out spreads, verticals, or some traders actually like to play butterfly trades just to play a bullish bounce potential off of weekly expected moves. And when you're at the green or the upper expected move, the logic would suggest a pull back or reversal. So for the intraday traders among us, S&P futures or Nasdaq or intraday stock traders, when a market interacts, touches the weekly expected move, you can look to short or fade, go against the movement, and put on positions. We like those option positions, but intraday tactics work fine to be short into it. All right, all that being said, we're going to end the week, or begin the Friday technically, into the weekly expected move. This means it does have a bear bend or bear bias short term going into Friday's session. And we'll keep these levels in mind. For the ES futures, that's about 3437. And zooming in, that's roughly where the market turned in today's print or closed. The Nasdaq, the specific level for it is 11,000, just say 11,600, 11,592. And the Dow mini futures, that's going to close right above that expected move. And just for level reference, it's above 2820, but mainly that official move is, we'll zoom in even tighter and see it taking place at 28291, 2890 is going to be the key level for the Nasdaq trade, for the Dow mini futures traders. And the Russell, there's where the relative strength has been. And the relative strength has been in financial names, XLF, and small cap names. That has boosted the Russell index. Keep this in mind. I'm going to compare the Russell to other indices. On this little pullback, it's pushed it to a new swing high. That is not the case, right, in terms of swing highs necessarily. All right, see, that's taller. Now, the Russell is weaker. It is not making new 2020 highs just yet. But it is making, if you want to think of it, this is August, September peak. It's making new recovery highs. And the Dow, not quite there. The Nasdaq, well, that made new all-time highs. Not quite there. And the S&P, not quite there. So just keep in mind the Russell is showing relative strength. That's on part because of financials. And as I mentioned, we can use this weekly expected move logic for individual stocks or ETFs. That does include financials, XLF. Technology, that's right there. Just for reference here, it's in terms of the Nasdaq, the XLK, 118.56. And you can look at the individual sectors and you'll see similarities. Again, we're focusing this video tonight on these expected moves. Now, energy has been weaker, right? The other stocks pushed up, other markets pushed up. Energy did decline and is facing new or close to new 2020 lows. And that's easily called a bear market. But this week was strong for energy, and this went from the weekly expected move all the way above. So markets do not have to reverse. There's no requirement that says they have to go down, but that is a probability play. It puts the odds in your favor, and with this indicator, you can see exactly when it works. When the trade fade against that green would be a good trade, and the other times it will result in a stop loss. Again, just probability, no certainties. Now, looking outside the market, that's our bigger picture. We can take a look at crude oil, and that looks tightly compressed. Oh, of interest, when crude oil got quite volatile, the implied volatilities got quite volatile throughout this May-June period in April. You can see how this expected move indicator was quite volatile itself, and that's the point. High volatility results in high uncertainty, or is a factor in high uncertainty. Options will price that in. Low volatility, low range, is a factor in low uncertainty. Price is not moving that much, and therefore the weekly expected moves or volatility bands or different kind of volatility concepts will be smaller. And that's the case in crude oil. It sure doesn't look that way when you zoom in, but on the bigger picture, it is most definitely tightly compressed. And at the moment, above the expected move. Gold, if you take a look at it, is at the lower end. It actually is sort of hard pressed to find things at the lower end of their expected move. And I think the only stock that I did a little search on was Domino's Pizza. So Domino's Pizza might be wrong on this exactly, but in terms of what I looked at, I think it was the only stock in the S&P that was underneath the weekly expected move. The bulk of the stocks, or many stocks, are actually into or above. So that's something to keep in mind. The strongest stock of today was actually an energy stock, Occidental Petroleum, followed up by just percent change. IBM shattered through. That was a big gap play. General Electric, ExxonMobil. Again, you're seeing some strength short term in the energy sector. It was up 3.7, almost 4%. Some of your top names in the S&P today were ConocoPhillips, ExxonMobil, Exelon, and others. So, and there's Exelon playing back to the high here. That was a target in a little trade we had not too long ago. Was basically playing a range fade support, supporting off 34, playing it back to the range high of 39. So that took place relatively quickly. So it's a range tactic. We call it low to high, high to low. Trades are at the top, they're short. Trades are long against the lows. And that's the bigger picture play. And just before we conclude the video, I like to look at stocks making new 52-week highs. I won't go through them all, but I'll let you pause the video at your leisure to see some of them. This is stocks in the S&P 500. 55 of them are making new 52-week highs, and in some cases, it doesn't really break it down, but in some cases, new all-time highs. So a little breakout here or sort by sector. The biggest is industrials. Many stocks in the S&P industrial sector are making new 52-week highs, and that would include John Deere, Caterpillar, and other Grainger, and UPS and FedEx. Those are things we're familiar with, but others we might not be. Consumer discretionary, Target, Nike, Dollar General, Gap, LB Limited Brands, and they call it a staple, but I think of it retail, Costco. Procter & Gamble, Estee Lauder, so on and so forth. So take a look at this if you are able to do the scans. These are strong stocks getting stronger in a market that has rallied quite a bit. So we'll see what Friday brings us. We still exist in this high headline risk tape. With any trade you take, always with your options, they have built in loss parameters with their spreads. But if you're trading shares of stock, honor your stop losses. Things can get crazy very quickly. Just be careful, as always. This is Corey Rosenblum with tonight's Theo Nightly video for October 8th, 2020.